Alright, so today is the top 3 worst mineral stocks for 2024, I think. I should have specified that when I asked ChatGPT for that information. But off with number 1 is First Majestic Silver Corp. AG. Now the reason it is bad apparently is high operational costs, disappointing earnings, and fluctuating silver prices have impacted its performance. So it'll be interesting to see if that's the case, or not, I suppose. If we look at them, they started in 2006. They did really well in 2011 and 2012, with a little bit of a dip in the beginning, in May of 2012. Another spike, but lower than their highest high of, what is this, $24? Yeah, it looks like $24 and 16.90 cents is their highest. 2016 they spiked up to 17.34. 2020 they hit 18, 12, 19, 12, 29, whatever. We'll look at that. Interesting. Now what they do, I'm not sure, but let's take a look at these high operational costs. See if we can see that in the numbers or not. If we look at the total revenue, we can see that in 2020 they were pulling in $366 million, and by 2023 they were up to 576. Interesting that it seems like 2020 was one of their lowest revenue years out of these 3, at least. 2022 being the highest. Now, the cost of revenue does look pretty tight, so their profit is not a lot of money. But let's just look at their total expenses and see how that stacks up. So their total revenue, their total expenses. Total expenses for 2020 was $318 million. So $366 million was the total revenue, meaning they made about 50, well, really 40 something, right? 30, 40 million in total profit. At least that's what number we should be seeing. I could also be misrepresenting these numbers, but we're just comparing total revenue to total expenses. 587 in 2021 compared to 540 for total expenses. Wow. In 2022, their total expenses were about $50 million more than their total revenue. And again, outpaced by another 60 million dollars, the total expenses coming in at 633. So that does not look great. Does not look great at all. If we look at the balance sheet, their total assets have continued to increase. Since 2020 they were 1.2 billion. Now in 2023, or last year, 1.9 billion, so it's gone up, interestingly, even though it doesn't seem like they could swing that too well. Their total debt is low, so they don't carry high debt, which is, can be good, can be bad. Maybe that's just because they are not making a lot of revenue, but it doesn't look like they're being irresponsible. Obviously, you don't want to have to liquidate everything just to pay off the debt. And if we look at their cash, it is kind of hard to determine what cash they're getting, but cash equivalents and cash does get pretty close to covering. Actually, yeah, in a lot of these years, it would cover their total debt. So they wouldn't really have to liquidate much. It is dwindling as we come to this last year, 2023, at 125 million. But the total assets are still pretty decent compared to that 1.9 billion. So they could liquidate some stuff after they used up the cash and cash equivalents and the short-term investments, which 62 million. Yeah, they'd be fine. I mean, it's not that big of a deal. It would suck. I'm sure there'd be a penalty. And then they could probably sell back some of their inventory, their raw materials, and, etc. So, I don't know. It doesn't look terrible to me. Operational costs, we saw that. And I thought if we look at just the operating expense, it's, well, I mean, the operating expense and the cost of revenue, it's kind of hard to tell what they're really explaining here. But the operating expense as it's being reported based on the selling, general, and administrative, which I don't know what that means. I'll have to dive into that at some point. And the general administrative expense, so I guess paying employees and doing the books. Maybe. What else would be general administrative expense? Management. In the tens of millions. Salary and wages. Okay, so that does go into operating expense, which makes sense. It's not a whole lot. 31 million for a company that's pulling in 500 million-ish a year. But yeah, their operating income is in the negatives in the past 2 years. It flipped from being 46 million-ish, 45, whatever, 47 million, 2020 and 2021 to being negative. And we could look into why that is, but I'm not super concerned about that at the moment. Let's keep it really high level here. Except we're not going to get a very good representation if we do that, especially if we're wondering why it's being valued poorly. But it does seem like the company is being responsible. It'd be interesting to look further into First Majestic Silver Corp to see what their game plan is and how they're treating this whole fluctuating silver prices, which I have heard that they've gone down. Silver has gone down, which is fine. It's still useful in a lot of different things. Cutlery, maybe not so much, but that's something. Trade, of course. And I can't think of anything off the top of my head, but there's probably a lot of applications for silver in medicine, oddly, and gold. So I could see why it doesn't look great, especially when you see negative income. That doesn't make me feel great. But just looking at the total expenses, yeah, that's the main issue right there. If their total expenses weren't so close, I feel like they could probably come out of this. Maybe if they're a little bit more responsible, they probably will have to do some cutbacks, sell off these assets, and lay people off at some point if it doesn't turn around, or if the market doesn't turn around on silver, or if whatever game plan or plans they have in place don't pay off this year. I'm sure they're gonna have to start downsizing the company a bit. They've been around since, what did we say, 2000 and 2000? Oh, I should go to all, shouldn't I, to actually see that? 2006. So they went through that first kind of big crash, but maybe that didn't affect silver too much. It didn't seem to affect this that much. I mean, you do see it dip down. I suppose, yeah, relative to what it was and what it is now, it did go down. Oh, quite a bit, actually. So in 2008, October, It was riding just under, around or just below 5, and then it just went way down. Stayed there for a little while, and then came back up. Really started coming back up in 2010. Really started coming back up, hitting at the end of 2010, hitting almost $15. And that was short-lived from 2010 to the beginning of 2013, basically. And then it went down almost to its previous low of 346. That's actually lower than it was in the beginning. Interesting. Okay, so let's move on from AG to take a look at Hecla Mining Company. The reason that's stated, again, by ChatGPT, I think this is 3.5, is that consistently missing earnings estimates, high debt levels, and production challenges have led to underperformance for HL. Let's see, they've been around for a while, since 1980, and they did really well in the beginning of 1980 when they first came out, and then they just tanked in 82. And they came back up in the end of 82, and then they went down in 86. And then they went up a little bit, but each of these spikes up have never hit their initial spike up in 1980 in September of $31 at close was the close. Now look at the high during the trade. In the 2000s, I mean, they went down to less than $1 for a while. From basically mid-2000 until about 2002, mid-2002. So for 2 years, they were doing bad, which kind of indicates that they might have really been able to hold it together. Whatever was happening, they've been around for a while. They're obviously producing something, but that doesn't mean that it's being done well. Do they make dividends? That's another thing. I mean, if it's a company that can hold on and they give dividends, they give some, little bitty dividends, but something. They had a lot of those. It's cheap enough stock. I mean, right now it's at about $5. So, you could make 3 pennies. Yeah, that's not a great dividend, right? And it doesn't look like they're gonna keep, or it doesn't look like they're gonna do any better. Although, so it's a mining company. It doesn't say what they do here. I could probably look that up. Let's find out what Hecla Mining Company mines to see why. It'd be nice if we just set it. Okay, about. So they've been around longer than they've been listed for publicly, which is not surprising. Looks like silver and gold is their game, although just this isn't a whole lot of information. Hecla Mining Company produces more than 45% of all silver in the United States. Wow. Okay, that's impressive if that's true. I feel like someone might have called them out on their bullshit if it was not true, but who knows. And has operating mines in Alaska, specifically in Greens Creek, Idaho, specifically in Lucky Friday, and Quebec, Canada, specifically in Casa Berardi, and Yukon Territory, Canada, specifically in Keno Hill. Okay. So it looks like a good amount of the north they cover, maybe more specifically the northwest. They were established in 1891, and they're in Dyalla. I don't know how to say that, I'm sorry, but they're in Idaho. Okay, so I mean, it doesn't look like they really care what specific metals, but mostly silver and gold and associated base metals. Don't know a whole lot about mining or precious metals, but I'm sure. Well, who knows? I could speculate and be way off, so I'm not going to do that. I'll link that later. So Hecla. Let's look at their financials. See how responsible or irresponsible they are. So last year they made 720 million about in total revenue, and their total debt for that year was 681. Sorry, not debt, total expenses to make that revenue in that year. Not terrible. It's tight. Obviously, not gonna be able to give that many dividends, especially depending on how many stocks there are. You take what's about 40 million, maybe 41 million, right? 720 minus 681, and divide that amongst your stockholders if you're not reinvesting in the company. Maybe that's part of why, but it's a small dividend rate, 3 pennies per share, if I was reading that correctly. And it does seem like that's typical. That might be one of the best years they've had. Actually, no, it looks like 2021 was a really good year, comparatively. And 2020 wasn't bad, so 2022 was kind of a rougher year. But yeah, it looks like the total operating costs, they've gone into the red since 22. Keeping it steady, but doesn't bode super well. Wow. So their normalized income was 23 billion in 2020, 88 billion in 2021. So that's a huge spike up, and then they went into the negative, and it looks like they might be pulling through because the TTM is saying 1.9 billion, not negative but positive. And that 88 billion, I mean, if they saved it right, that could have kind of covered them for these trouble years. So maybe bad, maybe not bad. A lot more stuff to look at to know if this is one of the top 3 worst mineral companies out there, mineral stocks out there. It's a company. Okay, so if we look at the balance sheet for HL, Hecla Mining Company, been around for 130 years. We see they have 3 billion in total assets as of last year. And of those total assets, if we go down to the cash, they have 106 million. And there's nothing reported for 2020 or 2021. They didn't start reporting that, at least not the Yahoo Finance, until 22. Interesting. Just for the cash equivalents. They have other cash and cash equivalents going on here, so I'm not sure. Maybe they just didn't want to unwrap those for some finance reason. Who knows? Who knows why that stuff happens, right? But let's look at the debt to income. So their total asset or debt to assets. It's not really debt to income, but it is still interesting to compare those two numbers. So the total assets 2020 was 2.7 billion. Total debt was 533 million. So not bad. Don't know what the cash would have covered. The cash and cash equivalents would not have covered that, but a decent amount of it, about a fifth, a little bit more than a fifth of that. And they've been keeping their debt pretty low, and they have increased their total assets a little bit year over year, tiny bit. So they're probably investing in either new technology, or maybe their total assets are counted as, no, it's not maybe that, but not too bad. I think not something fantastic that's going to be growing and growing, but it seems like they know how to deal with difficult times as a company. So that's good. I mean, obviously this is not any advice. I'm just looking through these. I find it interesting. Don't take my word for any of this. I'm not telling you to buy or not buy these things. I'm just curious. Anyways, so It's kind of interesting looking at these stocks that are deemed terrible by ChatGPT. I would be curious to start looking at some blogs to see what they think about stuff like this, because then we'll know, is it just chat or is it something else? Okay, so we'll look at the third company that's supposed to be just in the toilets. Sibanye Stillwater Limited, SBSW. And the reason why is operational issues. That's a very general statement. Geopolitical risks and exposure to volatile platinum and palladium prices have resulted in poor stock performance. Okay. So I don't know where they're located as a company. I don't really know what geopolitical risks mean, but it does look like it's kind of volatile. Like it goes up, 2016 especially, it goes up, 2021, 22, and now it's just back down, all the way down to where it was lower than what it was in 2013 when it started. So, doesn't bode great, but based on this company's ups and downs, I mean, probably come back up. Oh my goodness, that is I don't know if this is correct, but it looks like it's saying 8.92% for its dividends. Is that right? That's crazy. Hold on. I would like to know what it's. Okay, yeah, it's like there's no way it's an 8%. The current dividend payout, 22 cents per share. And the share price right now is $4. So I mean, you could $5. So you could buy a few of these, and you'd be making 22 cents. Okay, so you buy, you spend $15. You have 3 shares, and you're making 66 cents. A year? Annual? Yeah, I think. So you'd make 33 cents every 6 months, I guess. I don't know how to really read that too well yet. It's something I need to get a better understanding of, but that's where I am now, and that's fine. Okay, so let's look at the financials for Sibanye Stillwater Limited. Total revenue in 2020 was 127 billion, and the total expenses was 87 billion. So not that bad, honestly. I mean, if we look at the operating expenses and we look at salaries and wages, we can see they cut a lot of people or they stopped paying them. Wow, that's we should have looked at the other ones. Salaries and wages. The cost of that went from, in 2020, okay, I think I know why that happened though. I bet if we had a further look back, we'd probably see it closer to these rates, probably somewhere in between these two, 217 million to 436 million on salaries and wages, which is what, so last year, 2023, 217 million on salaries and wages, but the previous 3 years, okay, that's not the right way to say that. In 2022, it was 436 million. In 2021, it was 1.1 billion in salaries and wages. This is the operating expense for 2021. And then the year before that, it was 100, it was 1 billion. So that makes me think that, I don't remember exactly what it was, but there was like a business stimulus thing that certain businesses could qualify for. Maybe they did that. Who knows? It doesn't seem like it really helped them much. But I'm betting if we looked at 2022 and 2023, we would have seen a bunch of layoffs. I mean, that's a substantial decrease. $600 million worth of salaries and wages just gone from 2021 to 2022, and then 200 million. And I mean, I don't know how many jobs pay $1 million, I'm sure they're out there. I'm sure there's some that pay more than that, although that's kind of crazy. But just to put that in perspective, right? From 2022 to 2023 for this company here, if everybody was making $1 million, that's 200 employees gone. And clearly, you know, you're not paying that many people $1 million, if at all. So that's not 200 jobs. That's a lot of jobs just gutted. Or they just pay people a lot of money and then just stop paying them that much. And I guess it's possible this is just incorrectly recorded, but that is just, I mean, I'm kind of surprised I didn't hear about this in the news. I feel like this would be a really big deal. Maybe I did and I just didn't pay attention to it. But, wow. Let's go Sibanye. I don't even know if I'd want to buy their stuff just because of how badly they did that. I mean, who knows what happened. I can't really judge. I don't do any of this stuff. And their total expenses have roughly stayed, you know, at least between 21 and 23, about 100, 105. Kind of interesting that those are so close, but they must have really been tightening their belts between 22 and 23, which is sort of a good thing, I guess. And that's billion. I mean, that's wow. Yeah. So revenue still better than the revenue, but not by too much. And maybe that's because of all those cuts that they made to the salaries and wages, people's livelihoods. Well, anyways, let's not get too emotional, right? Their balance sheet, total assets, and let's just dig right into the cash and cash equivalents and then just look at the cash. So they carry a pretty nice amount of cash. Wow, that's one of the highest ones we've seen in a while. They really started packing it on in 2020 with $20 billion of just cash. So they can cover stuff. And they're investing capital too. I'm not sure what that means exactly. I'll have to look that up. Let's look it up right now. Invested capital. What is invested capital? Invested capital is the total amount of money a company raises by issuing securities to equity shareholders and debt to bondholders. Alright, that's... Alright, let's go into it and see more than just that part there, because that does not make sense to me. Okay, invested capital. A firm's total capitalization is the sum of total debt, including capital leases. So are they selling their debt? Is that what that is? Maybe. In the stockholders' equity section of the balance sheet, IBM increases the common stock for the total par value. This is okay. I need to look at that offline. If y'all know what it means, please explain it simply in the comments. But interesting. So yeah, but they're carrying a lot of cash, and then in 2023 they just did not give what cash amount they had. So, but their cash and cash equivalents didn't change by much. Not sure what that means exactly. Not sure what they have to legally show either. Maybe it's just a contract with Yahoo Finance. But their total debt went up a lot. I mean, it doubled in 23 for some reason, and we don't really have insight into what that is. But this out of the three, definitely to me, is the worst. It just seems like they... let's see, let's look back at these ones really quick. I don't want to go too much longer here because we've been going for, okay, almost 30 minutes. So that's far longer than any of the other ones have been, but it's okay. What was it? The operating expenses. So yeah, no, there's not a huge... Okay. Well, this doesn't even have the word salary in the income statement. Let's see if this one does. I think this one did. I'm pretty sure we saw that in here. Yeah, salaries and wages. I don't know what G&A is, but that didn't go down. In fact, it increased. So it looks like they've expanded a little bit. Well, they expanded from 2020 to 21 for salaries and wages. Maybe that's raises. $4 million worth of raises, possible. I'm sure that some of that was new hiring, and then 31 million, million in 22, 31 million, just a little bit more. So I mean, it looks like they're inching up, and it does look like this year they might, except that's trailing 12 months, so it's hard to say. We won't really know until they post for this year. But this one could be this could be okay. First Majestic Silver, I mean, they've been around for a minute. Hecla, Sibanye, it seems like they're having some troubles though. And how long have they been around? 2006, I think. Is that right? Hidden all. Come on. Okay, well, that's doing whatever it's doing. And Hecla just doesn't give us what, so we wouldn't really know if they were laying people off here. I mean, I guess we just look at the operating expense, which probably mostly just covers that. I have no idea what G and A is. Maybe the Google box will know. Examples of general and administrative expenses include building rent. Okay, so yeah, so just the kind of KTLO, keeping the lights on, which makes sense for operating expense. Okay, so very interesting stuff. Again, put your thoughts and opinions in the comments, and let me know how you feel about this. Other than that, have a great day.